Hello, you're watching Market Week in Review, the week ending February 13th, 2015. My name is Blair Lowman, and I'm here today in Russell's global headquarters, and I'm joined by Chief Investment Strategist Erik Ristuben. Hello, Erik.
Good morning, Blair.
Let's start with a few prominent political headlines this week. First, the announcement between Russia and Ukraine of a possible ceasefire on Sunday has had a ripple effect across the markets. What should investors expect going into the week ahead?
Well, the peace agreement goes into effect this weekend, so there's some skirmishing that's going on today, and that's obviously making some news. In general terms, if it holds, it's kind of one less thing to be worried about. And in an area where you're seeing broad-based growth begin to very modestly accelerate in Europe, you saw the GDP numbers came out today. Europe grew in the fourth quarter at 0.3%. It was led by Germany that grew at about 0.7%. You know, fairly small numbers, but still importantly positive, and also importantly better than they had been. So our expectation has been, as we've been saying for quite some time, is that Europe will start doing better. It'll start doing better just in terms of cyclical, but it also has stimulus in terms of the ECB quantitative easing going on, and it has the advantage of a weak euro relative to the dollar. And we think on balance, the elimination of the worry in the Ukraine is actually a positive for the markets.
Well, now other headlines point to further discussions in Greece. And regardless of the outcomes between these discussions between Greece and their European counterparts, what should investors remember as they continue to read headlines and speculation as the February 28th deadline approaches?
Well, I think the key thing here is to concentrate on not just what's happening in Greece, but what its ripple effect is to other countries. You know, countries like Portugal, Spain, and Italy. And what you're seeing is actually quite a modest reaction to the Greek issue in those other countries. Maybe a little bit more in Portugal than you're seeing in Spain and Italy. Spain and Italy have yields on their 10-year debt that's still well below the U.S. Treasury. So if people were really worried about the contagion effect of Greece, which is what they were worried about 3 or 4 years ago, then you would expect to see a lot less good behavior in those countries, both their bonds and in their stock markets. We're not seeing a real concern over that. At the end of the day, we think a deal is going to get done, probably at the deadline, because it's in the best interest of both parties to actually get a deal done, even if it is a kick-the-can deal for just a couple of years.
Now let's wrap up in Asia, which had another relatively strong week in the markets this week. So is this positive trend something that investors should expect going forward?
Well, let's kind of take it by the two biggest countries in Asia, right? We'll take Japan and China. So Japan, you're actually seeing the economic data come in reasonably good and frankly better than most people had expected. So I think you're beginning to see some positive, reasonable positive momentum out of the Japanese fundamentals, and I think that's actually being reflected in the market. The Nikkei was up about 1.5% this week, which I think is probably a good sign and kind of along the lines of our expectations. China also was up. The Shanghai Composite was up about 1% and change, and it was really probably due to the fact that the People's Bank of China has been engaging in a great deal of stimulus lately. We think they'll continue to do that until they can get that growth rate kind of at that 7% that they want. Obviously, we're seeing some signs of slowing of the economy in China more than they wanted, and they're trying to stimulate the economy through monetary policy. And you're seeing the early results seem to be actually look like they're being somewhat successful. You saw credit growth surge in January in China, and so maybe you're seeing the positive, beneficial effects of monetary policy in that country. So we're hopeful, keep an eye on it. We hope they will continue to grow at about 7%, which is our expectation. If they do, that means the global economic growth picture still remains fairly positive for the rest of the world.
Well, thank you so much for your insights, Erik, and thank you, and we'll see you next week.